We're going to prepare schedules of cost of goods manufactured and cost of goods sold. Keep in mind, our schedule of cost of goods manufactured includes three types of cost: direct material, direct labor, and manufacturing overhead. It calculates the cost of raw materials and direct labor used in production and the amount of manufacturing overhead that has been applied to production. And finally then, it calculates the manufacturing cost associated with any goods that were finished during the period of time. First, let's look at our product cost flows for raw materials. We have beginning raw materials. We'll add to that materials we purchased during the period, and that gives us raw materials available for use in production. Finally, we will deduct any ending raw materials inventory to get the cost of raw materials or direct materials used in production. Let's take a look at an example. If raw materials beginning inventory was $32,000 and during the month $276,000 of raw materials was purchased, that means we have $308,000 of raw materials available. A count at the end of the month revealed that $28,000 of raw materials is still left. What will be our direct materials cost? The direct cost of direct materials used in production then is $280,000. If we were to think about that in terms of our box, again, the left-hand side has our beginning inventory plus our purchases, and the right-hand side will have the amount used in production and our ending inventory, and both sides of the box must balance out. Next on our schedule of cost of goods manufactured, we'll pick up our direct material and our direct labor and our manufacturing overhead. Our direct materials, direct labor, and manufacturing overhead added together equal our total manufacturing costs. And those are the costs that we add to work in process during a given period of time. So we started off, we were told that direct materials used in production was $280,000. Direct labor was $375,000. And $180,000 of manufacturing overhead was added to production during the month. That means our total manufacturing cost will be $835,000. So again, once we've calculated our total manufacturing costs, those costs we can have as additions to work in process. If we're thinking in terms of our boxes, we'll have our beginning work in process, and then we'll have the cost that we added, and those have got to equal our cost of goods manufactured plus our ending work in process inventory. Let's go ahead and take a look at some numbers. Beginning work in process was $125,000. Manufacturing costs added to production for the month were the $835,000 we've just calculated. There were $200,000 of partially finished goods remaining in work in process inventory at the end of the month. That means the cost of goods manufactured will be $760,000. We'll take our $835,000 manufacturing cost plus our beginning work in process inventory, and that gives us the total cost we need to account for. And they will either need to have been left in ending work in process or transferred out as cost of goods manufactured. And notice our cost of goods manufactured shows up on our cost of goods sold statement. Again, if we were to look at boxes, our beginning work in process balance plus our manufacturing cost of $835 gives us the total cost we need to account for. Both sides of the box need to equal. So if it wasn't left in ending work in process, it had to be transferred out to finished goods, which is our cost of goods manufactured. So again, our work in process balance will help us calculate our cost of goods manufactured, and that cost of goods manufactured flows on to the finished goods section of our cost flow chart, and we'll use that to calculate cost of goods sold. We'll take our beginning finished goods inventory, add to that cost of goods manufactured during the period. That gives us goods available for sales. Finally, we'll deduct finished goods inventory, and whatever is missing will be our cost of goods sold. Let's take a look at some numbers. Beginning finished goods inventory was $130,000. The cost of goods manufactured for the month was $760,000, which means our goods available for sale will be $890,000. These goods are either left in ending finished goods inventory, which we're told is 150,000, or they have to be sold. They were delivered to customers. So our cost of goods sold then will be $740,000. Again, in terms of boxes, we have our beginning finished goods plus our costs of goods manufactured has to equal our ending finished goods inventory and anything that was transferred to cost of goods sold. And in terms of our boxes, beginning inventory of 130 plus our cost of goods manufactured gives us our 890 in goods available for sale minus ending inventory will give us our cost of goods sold.